Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, May the 8th. The year's 2024. Let's talk trading. Picard principle with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And a reminder, risk management. Never lose more than you are willing to lose on any one single trade. The Picard principle, what is it? It is the principle that states, it is possible to commit no mistakes and still lose. Do you believe that, Walmal, when it comes to trading?
Yeah, absolutely. I mean, there are so many times, where you do everything right and it just goes against you. And by the way, for those engineers out in the audience, I know there's a couple of you out there. The Picard principle is different than the Picard theorem. Picard theorem has got to do with this idea of singularity, and so this is, it was named after Emile Picard, so it's something totally different. And the singularity theorem is essentially saying that eventually machine and unique variables. Actually, when there wasn't machine per se when Emile went and wrote it, but the idea was that unique things will all come together to a singular point, and it's a major theorem for engineers in the design of things that are going to last into the future. And of course, our science or science fiction for science futuristic people looking forward to, well, that's a singularity principle, the idea that man and machine are going to become one, but so a totally different concept. The Picard principle, though, yeah, it's interesting, and it probably was written as a half joke, when it was first laid out. But then the problem is that half joke was written on observation, and observation, portends to what truth you actually see. And the reality is, you can go out there and just take a trade. You followed your method, you followed your risk management, you followed every single thing there is to follow. And for whatever reason, the market goes against you and you take a loss. You take, as the kids say today, you take an L, and that's just the reality of what can happen. And here's the scary thought that people have to go and, take into account, is the fact that, we say all the time, right? You never trade more than, to never risk more than you're willing to lose on any single trade. Well, the problem with that is that, the market could fall out from underneath you, and you could go and set your stop loss in a certain particular place. And I've heard lots of stories from traders in the past, and I've had it happen to me. And, what can happen is that the broker goes and takes everything from you.
Yeah. Well, the stop loss is because in FOREX you don't have true limit orders. It's when your price hits, it becomes a market order. They're thieves.
Right. Exactly. And I've even heard it happen in the equity markets, it's just a little bit more difficult for them to do it, but they still can do it, and a perfect example of that is that, when you go and place your orders out there, what it does is it just tries to match up the claim they'll make. Well, there was just nobody on the other side to take the trade. And I'm sorry, Mr. Jones, but there's nothing for us that we could have done for you. And they've pulled that, and it's been here in the U.S. anyway. It's been upheld in the court saying, yeah, that's legit. It can happen. It's not supposed to happen because there's supposed to be liquidity in the market, or enough liquidity that it can cover those situations. But what happens if all of a sudden, you sat there and you're buying a stock because it's running up, all your technicals, your fundamentals, whatever, and then all of a sudden, turns out that the CTO, the chief technological officer, goes and has a heart attack and dies, and turns out that the entire product is based on his vision and there's nobody else backing him up. And the next day, the stock opens up, okay, and it opens up not where it's certainly not where it had closed the day before, but it opens up at zero. You know,
Yeah.
And we saw that. You know, if you think about it, just going back to 2020, we saw that with oil. You know, some people they remember that oil at one point was literally trading at -4. You know, and it's like, now could you have gotten in at that -4? No, but the point was that's where the market was. You know, it went from 40 to -4, and then, you know, like 3 weeks later it was at 60. You know, but the thing is, it just shows you the volatility, and when it moves that fast, stops sometimes just aren't honored. So, you know, you just got to be careful.
Yeah, you had to remind me of that. I missed out on that one.
We all did. I got the run from 40 to 60.
No.
I should have been getting it.
Yeah, I remember being in a friend of mine's backyard. He was showing me his greenhouse that he was working on, and I had my phone out, and I'm going like, holy cow. If I remember correctly, it was sitting somewhere between 5 and 10, and I was like, this is going to be an opportunity. Then the next day, it's like you said, it dropped big time, and then about 2 or 3 days later, it came back.
Yeah. Yeah, and there was a lot of people who lost money because when they saw oil at $5, and they said that's unsustainable. And what did they do? They over leveraged themselves. Okay, and what that did was it took them out of the market. The brokers went and cleared them out, because what happened was, let's say they got in at 10. Okay, and when it got down to, you know, and they bought, and they went down to 1 or 2, something like that, and now there's a margin call on you, and they don't have the money to cover the margin call, because we're not talking about the stock market anymore. We're now talking about commodities. And so when the margin call happened, they didn't have the cash in the account. Guess what? You were sold immediately.
Yeah.
And you took the loss.
Yeah, I remember that was back when that guy Dan Pena, and then there, I don't know if you ever seen any of his YouTube videos, but he just basically is this old guy. He gets out there and he cusses a lot and tells you how rich he is. I don't know how true it is, but it was funny. I remember he goes, they're going to be giving me the oil and the ships that they bring it in. And sure enough, he was right.
Yep, he was. Yep, but the point is that, you know, you can do everything right, but don't be surprised. So what do you do? I mean, okay, we just gave you all the negative, okay?
Right.
So what do you do about this? You know, the reality is that what we have to do is we have to protect ourselves. You know, it's sort of like you get into a boxing match, you know, and you're being, you get in there and you realize, oh boy, I'm overmatched here. I'm overpowered. You know, or actually I'm underpowered against my opponent. I'm underskilled against my opponent. What do I do? You know, and the best thing to do in that situation is to go and become a lot more risk adverse to it, everything going on, and, you know, essentially keep trading the plan that you had, but at the same time maybe becoming a little bit shy about, you know, the risks that you're going to go take, and so that you don't get wiped out. Wiped out is that you get hit in the face so hard that you never box again, you know, or live again,
Yeah.
so to speak.
Yeah, back to trading. Did we have news at the bottom of the hour? Because I'm looking here, prices just oscillating above and below the 30.
No, we have no news. I mean, there may have been yellow news, but there was nothing of any significance until tomorrow. Let me just go and check real quick. No, there's nothing. At 1 o'clock, there's 10-year bond auction occurs.
No, but I'm just looking at price oscillate across the H1 open here, and
yeah,
it's, let's see, it's down, up, down, up, down, up, coming back down now.
That's what I was talking about yesterday on the video. That's what it's been doing all week long.
Yeah.
Just this oscillation back and forth. It's almost like like a clock, back and forth, back and forth.
Yeah, and before we got on the video, you were saying you've pretty much made your daily goal and then some, but we've only got 43 pips of range.
Yeah, and that's what happened was I'm still taking nothing but flip-flop boxes, but what I've done is that one, I'm looking at what's happening is if you go and look at you've got an indicator. I don't know if it's yours or it's one that you've modified, but it's called M candles. And what it will do is it'll go and map out another time frame over the top of whatever time frame your current chart is.
Right.
So for instance, I've got a 1 minute chart up, and I got the M30 candles, drawn on top of them. And what you see is that we're just seeing these 30-minute candles. They're just like is stacking. You know, what I mean by stacking is they're shifting up or they're shifting down, back and forth, back and forth. And I said that yesterday on the video too. And the interesting thing I said yesterday in the video, I think when we shot the video yesterday, we had like about the same range that we are right now, maybe even a little bit less. And I said I wouldn't be surprised at the end of the day we're sitting here with 70 or 80 pips, and then we actually closed today with a 70 pip range, because what it's doing is it's actually sitting here and it's not moving very much every single hour. I mean, a read off would be in terms of number of pips we've moved is 11, 11, 18, 10, 19, 10. You know, so they're very, very untypical ranges. But we're not getting the 20 and 30 pip ranges that we usually see at about this time of the day. But what it is doing is it'll go in a particular direction and maybe only 10 pips or so for the entire hour. Or the M30 you see maybe something along the lines of maybe 7 to 10 pips, even less. And so what you can do is you can make some money, because what you can do is once you recognize that pattern, you see the flip-flop box, and what it does is it goes and it'll run a range but drift in one particular direction or the other. Well, I don't care what the drift is as much as the fact that I know that it's going to put it in a range. And once that range is established for that 30-minute candle, which only takes maybe the first 5 or 6 minutes of that candle, what you do is you just go and trade back to the middle. You just constantly trade back to the middle. But the thing is, you can only doing that because these ranges are so tight, you can only pick up 2 pips or 3 pips max. The 2 trades that I got out of when we first got on talking to each other, I got 6 pips out of it, but that's because I had 2 trades stacked, one on top of the other. And so what happened was it went in, it ran in my direction a little bit, not enough for me to get out, ran back up, I got another entry there, went back in a second time. So now my risk is twice as much, but my potential for reward is twice as much as well.
I'm sitting here watching a flip-flop box. I'm wondering now, hey, are you still using the state that I came up with, was it, a year or 2 ago? I guess it's a couple years ago.
I have them on the chart. I don't know if I really pay that much attention to it. The ones I pay attention to are the outside bar ones.
Right.
Just because I know that when you get an outside bar and it breaks in the direction of the outside bar, usually you get a really nice move. So that one, when I see that one pop up, then I pay attention to it. The inside bars, it's there, but the reality is I see it, so easily that I don't even know if I necessarily pay any attention to it.
Right. Oh, you know what? Speaking about paying attention, we're just about out of time. It's been one of those days.
Yeah, it flew by today. And traders, we just need to pay attention to what's going on and just look for those patterns, and just take advantage of the patterns and, adapt to what we're seeing as a market right now.
Yes.
The market's changed.
Yes. So, yep. So,
trade it.
Yep. So always remember, never forget, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. Thanks again for watching and listening. This is TheRumpledOne, over and out.